Welcome back to the special coverage of Motor Trade this Diwali. Well, as promised, we have Dharmesh Kant of Chola Securities who joins us on the show. Hi, Dharmesh. Good to have you on the show. Happy Diwali to you, your family, and your entire team. Dharmesh, give us that, give us a couple of picks. Be lenient today and generous, actually. And give us two picks. If you could potentially put in a target price as well as the rationale will be good as well. Go ahead, Dharmesh.
Sure, Nigel. Happy Diwali to you and all your family members and the entire team at CNBC-TV18. Let this year be very prosperous and healthy for all of us. Nigel, the first pick is the wildcard entry. That's the Orient Pro Solutions Limited. I think this company's phenomenal performance for the last 3 years. 30% kind of a compounding on the profitability. And three quick pointers, if I can point out. One is the AI-enabled transaction banking and suites with all the banking and fintech in play. They have recently won an order from SBI, which opens doors for many other banks.
Dharmesh?
Yeah.
Dharmesh, we missed the stock name.
The stock name is Orient Pro Solutions Limited.
Okay. Okay.
Yeah. And the second, rationale.
No, you were giving us the rationale. Please go ahead.
Yeah. Thanks. And the second rationale is the data center play is also there. Around 20% of the revenue comes through that. And that is the architecture stack of the data center. So that's an asset-light model. They just, design the data center and put that into play. They are gaining a good traction out there. And the third one is the entire, transit mobility and ticketing system. They have recently won an order from California Open Loop Mobility System. India, Delhi Metro, Chennai, and Mumbai is already in place and winning more. I think profitability by FY27 will move from 188 crores to almost 308 crores. 30% kind of a compounding will there with, or improving operating margins. So our target price for 1 year is 1617.5, but I think it will be re-rated and it looks like a double. The other in the pick is Reliance Industries. It's a stable, solid opener out there. And as the name suggests, it's been a consistent, compounder and wealth creator for decades for the Indian equity market. And the quick reason I would highlight is in the valuation of Reliance Industries, the present market cap, I think all the verticals, be it O2C, exploration and production, or the other verticals of Geo Platform is fully priced in. What is not priced in is the retail vertical of Reliance Industries. This time the posted around 17-18% kind of a growth numbers. Subsequently, it's likely to do so. The grocery, apparel, textile, and jewelry, plus the consumer electronic appliances and the beauty care all put together, they're likely to post a top line of around 350,000 odd crores with an EBITDA of 27 to 28,000 odd crores. Compared to this, with all the names of the top names in this industry, be it DMart, Nykaa, Trend, Titan, or the Whirlpools of the world, put together, do a top line of 270,000 crores with an EBITDA of 20,000 odd crores. They are valued at 6 times their sales on an aggregate level, whereas Reliance Retail, as of now, is valued at around 2 times of sales at the aggregate level. I think a lot of value unlocking is likely to be played. Our 1 year target for Reliance Industries is 1650. It's there in our Diwali basket as well. But I do think if someone is willing to wait for 2 or 3 years, it's a multi-bagger or a doubler from the current levels.
Okay, Reliance going with the big boy.
You've given us two Orient Pro Solutions from the broader markets, and Reliance Industries, the big boy. It'll have to do the heavy lifting this year if the Nifty needs to move up. Dharmesh, it's feeling festive. Give us one more.
Yeah, sure, Nigel. The other one is from the banking space. I think banks are doing pretty well, particularly the public sector banks. If you look at them, the asset quality improvement has been quite great. And we like Bank of India the most just because it's pretty undervalued. The valuation is around 0.6 times price to book value, multiples with advances growing at 14%. And credit cost, asset quality, everything falling into place. They are reducing one of the best in the industry as of now. Going forward, I think the two verticals which will do the catch up for the 16-17% kind of credit growth is one with the retail, where they have 3% kind of AUM exposure right now, and the vehicles, which they have 1.9 to 2% kind of exposure. The management was very aggressive about that. I think this will fall into play, and the ROE will move from 0.9 to 1%. So the moment it is above 1% kind of an ROE, it will deserve a serious re-rating. 1 year target price for that is 155. But I think multiple re-rating is round the corner for Bank of India. A good solid stock to be there in your portfolio.
Dharmesh, great speaking with you. Bring in Deven Choksey as well, who's obviously been a constant on CNBC TV18 for the last few decades. Deven, happy Diwali to you, your team. Great to be speaking to you on this auspicious occasion. Let me dive straight to it. Pick for Samvat 2082, Deven, if you will.
Yes, Prashant, happy Diwali and wish you all a very happy New Year in advance. I pray God for, I think, all-round prosperity and health for all of us. I think there are companies which are going to grow bigger in size, and that's what I think we are likely to experience in this financial year, as well as I think the Samvat year 2082. We believe that I think some of the companies in the real estate space and in the auto space, auto ancillary in particular, they could possibly give, I think, at a rate of around 30% kind of a CAGR return over next 3 years or so. And that's where probably I think the inclination is, because the discretionary spending is on rise. Interest rate is on a lower side. Due to the GST cut, I think the input cost is coming down, and that is a good formula actually for some of the auto ends, as well as I think the real estate, particularly luxury segment real estate, likes of Lotus developers. I think they remain relatively more sure bet as far as I think the growth, along with the higher return on capital employed. So we remain more comfortable on that.
Deven is still with us. Deven, actually just on that, any recent IPOs, listings, etc. And it so happened, right? You've got many of these. Take Ather as an example, which Nilesh was talking about earlier. It's not very. It doesn't have a very long listed life. Didn't do very much for about 3 months after listing, but since August has basically doubled. Any interesting recent listings that you've taken note of? Anything you like out there?
Yes, Prashant. I think a couple of companies, I think, which we like. One, of course, I think the recent one which got listed is Jaro Education. I think that company is a distinctly different model. It has basically, I think, an approach of partnership with IITs and IIMs as far as I think their business is concerned. They produce enrollments for them, and that is where probably I think this company is different, and they work in a partnership as far as the fee collection is concerned and sharing of those fees concerned. So it's a very good model, I think, which we like, and I think a cash positive, higher amount of ROC, etc. So definitely, I think we like this company. Second, within the real estate space, we like, I think, which is recently listed again in the month of September, is Lotus Developers. I believe that I think this is one company which is in luxury and ultra-luxury segment with a distinctly high amount of, I think, return on capital employed and with a zero debt, with a sizably large amount of EBITDA margin. And I think a very asset-light model, redevelopment kind of an asset, I think, which they take into account. So we like such kind of niche players who are basically growing on their own strength and probably, I think, giving a larger amount of growth opportunity to investors. Yes, I think you're right. I think sometimes after the listing, you get an opportunity at lower levels. But subsequently, when the market starts realizing the worth of those companies, they start moving up in a right direction. And that's what we look out for, I think, when these companies come into market.
All right, Deven, we'll leave it there. Thank you very much for joining us here on this edition of Mahura Trading.